To honor everyone's time, we're going to get started. Good evening. I am Bill Brown. I'm the Director of New Faith Expressions for the Baltimore-Washington Conference. Welcome to Training Tuesday. We are so excited to have members of our finance team with us tonight who will provide some real hands-on information about the Paycheck Protection Program forgiveness aspect of the CARES Act. So we're excited to hear from them tonight. We're going to open with a word of prayer and then get a couple of instructions before we get started. So if you would bow your heads with me for a moment of prayer. Holy and gracious God, we give you thanks. We give you thanks for the opportunity to gather together tonight, whether it's via our computer or phone or tablet, so that we can come together as the body of Christ, known as the Baltimore-Washington Conference. I give you thanks for the giftedness of the people in our finance department under the leadership of Paul Eichelberger and for their insight that they bring to us tonight. So we pray for your Spirit to be with us, to guide us, to give us insight and understanding, so that even in the ministry of administration, we can continue to bring you honor and glory in the name of Jesus. Amen. So a couple of ground rules or a couple of technical aspects of tonight. If you have a question, please, you don't have to raise your hand in your participants box. Please go to your Q&A button and you can press Q&A, and that will, you can ask your question and hopefully we'll get to it tonight. But we're going to get started with a little polling, just a couple of questions. For those of you who are listening to us via phone tonight, you'll be able, if you can log in tomorrow, you'll be able to see some of the polls. But tonight we're going to launch the polls. We'll start with, to select your district, please take a moment to let us know which district your church is located. One of these days I might invest and have us get some theme music to go underneath some of our polling. You can sing the Jeopardy theme to yourself if you choose to. We're going to end this poll and get an idea where everybody is from tonight. Excellent. Looks like we are evenly spaced out across our annual conference, but if you are a competitive person, give yourself a hand, Baltimore Metro District. You seem to be slightly in the lead for the number of participants from a single district, so give yourselves a hand. Let's look at poll number 2. We just want to know if you're a clergy person or a lay person. Take a moment to answer that question now. Everyone is getting the hang of polling after this many webinars that we have been doing. So let's end this poll, and lay people, give yourselves a hand. We have a nice, excellent representation of our laity this evening. So welcome. And let's take a couple other questions the finance team wants to know. They'd love to know your average worship attendance size of your congregation. So just take a look at that list. Select one that best represents your church or churches. All right, let's see the results of that poll. So we have a wonderful representation of a variety of sizes of churches from within our annual conference. It seems that predominantly our mid-sized churches, 51 to 100, are represented tonight, but it looks like there are a number across that whole spectrum. And last but not least, the one thing we wanted to make sure people knew is you may have already applied for the PPP program, but they are still receiving applications. So we're just curious as to where you might be in your progress. So just answer for us one of the following if you have received funding. All right, looks like people have finished answering that. Let's take a look at those results. And 86% of you have received your PPP funding. For those, we still see a few that are still under review, a couple whose applications were rejected, and a handful that did not apply for PPP funding. But it's my understanding from a conversation I had with Paul before we began our broadcast tonight is you can still apply for the program. And you need to call Paul Eichelberger, and he will help you through that. So speaking of Paul Eichelberger, we're going to turn it over to him and to his team tonight as they guide us through this process to make sure that we can get our funds forgiven. So Paul, welcome. Thank you for joining us tonight and taking the time to give us some new insight and understanding.
Thank you, Bill. Appreciate everyone on the call tonight. I know that after a long weekend, and a beautiful day outside, this might not be the one that you really wanted to attend. You have to be pretty hardcore to want to join for a PPP Forgiveness class on the day after Memorial Day. So we hope everybody had a very good holiday. And we look forward to being able to go through some things tonight that I think are fairly complicated. This is not the easiest thing to pick up and understand. We're going to try to show a couple different ways to look at the application. Hopefully by looking at it through a couple different ways of viewing the data, you'll get a little bit more comfortable first with the application. And that we kind of hope that you'll be able to use some of the resources that have been sent out. 2 resources went out earlier that I want to make sure that people got. If you didn't get that, please kind of raise your hand and let Bill know that that's something that might not have made your box. And I'm really thankful to have the rest of our finance team with me here today. So I'll do a quick introduction and see if anybody wants to take their microphone off speaker at this point. I am joined by Pierre McPayton. Pierre's our controller at the conference center. Pierre, would you like to say anything? She cannot find her mute button. That is just a shame. Stacy Riley is with us today. Stacy is our senior accountant in the office, and Stacy has the honor and privilege of actually doing our PPP application for the conference. So Stacy, do you have anything to say?
Hi.
It's good to have you with us tonight, Stacy. And Dave is our business analyst, and we drag him into just about everything we do. So Dave, do you have anything to say tonight?
Hello, everybody. That's about it.
Very good. Well, thank you once again. All of the materials that we have tonight will be things that will be able to get sent out to you. So we will make sure that those are all available, and hopefully we'll have a few more tools to share with you as well. I'm going to be sharing my screen here tonight, so let's get that set up. And tonight's agenda is just going to be a simple one. We're going to stay pretty focused on just the forgiveness process. I'll start us off by giving us some general guidance, and then Dave's going to follow up with some details. Stacy's going to go through an extensive work on the documentation associated with the application, and then Pierre and I will finish up with some BWC scenarios. We were very thankful to allow people during the registration process to give us questions. We're kind of hoping that this is not just one of those seminars or webinars that you've been joining. We've seen webinars on just about everything from preparing teachers to preparing investors. The adulting is teaching you how to cook while you're at your stay at home. And I just hope you're kind of sitting back and maybe having a little bit of a coffee here tonight. We believe that by allowing the focus to be on the questions that you asked, that this is going to be a webinar that helps you through these next steps of getting comfortable with the PPP application for forgiveness. So we wanted to go back to a slide that we started with when we did the applications to the bank, which we called step 1. And step 1 had 2 more processes. We knew we were going to end up getting the money, spending the money, asking for forgiveness, and then at some point we'd either be granted forgiveness or we'd return the money to the bank or we take out a loan. So I'm simply going to take a look at the updates that we've done to this chart. Some of them are fairly minor, but it's a little bit of a language that we need to learn as we're taking on these new things for the PPP forgiveness. The first thing that we've learned is that the PPP distribution date, the date that the money actually hit your account, is going to be now called day 1. We used to call that the loan origination date, but we're going to call it day 1. And day 1 is part of a process that's called a 56-day period. I'm no longer referring to that as 8 weeks. I'm calling that exactly 56 days, and it's called the covered period. And the covered period is where you do your spending. If you spend the full amount, you can get full forgiveness. If you keep all of your receipts for the things that you spend, you can get full forgiveness. And if you are only spending things on expenses that can be claimed as qualified expenses, you will receive full forgiveness. And there are some things that we've learned about this forgiveness. First of all, the qualified expenses we knew early on as being payroll benefits, debt interest, rent, and utilities down here in the bottom left. And as we look at those, payroll and benefits are considered payroll costs. And the combination of those 2 categories, as long as you exceed 75% of the money that you received in payroll costs, you'll be able to get full forgiveness. So here's the short list on this slide that tells you how you get partial forgiveness. If you're given an amount of money, you'll get partial forgiveness if you spend less than the full amount. You'll get partial forgiveness if you spend less than 75% on payroll costs, payroll cash, and non-cash benefits. You'll get partial forgiveness if the individual cash payroll is reduced more than 25%. So that's somebody's individual pay. If somebody's individual pay is reduced by more than 25%, you'll get partial forgiveness. In your pay period, in this covered period, if the full-time equivalents are reduced by more than 25%, you will also get partial forgiveness. So we'll be touching base on some of those items a little bit later. Dave will have some details on exactly how those partial forgivenesses are calculated. But as you finish your 56-day period, we enter into step 3. Step 3 is where you repay or get the loan. Just know that the forgiveness application is something that will be submitted to the banks by the end of October, October 31st. This is a forgiveness process that the bank will pursue. The bank will be the one who tells you if you've received forgiveness for your funds. And if you end up going into a loan, just know that that is a 2-year loan at 1%, and the payments are deferred for 6 months. We'll have a little bit more detail on that. If your church decides to go towards getting the loan and you couldn't spend it all in step 2 and you have some money that was left over that you're going to continue as a loan. We continue to advocate that that is a church conference activity that would require a church conference, and that is a formal process that requires a pastor's consent letter as well as a district superintendent's consent letter. We'll move right on, Bill, to the forms that we're going to review. So these two forms, the first one being the PDF fillable form. This was sent out to you this evening before the seminar. Here's the link for it from the SBA website. This application, similar to what we saw at the beginning of the PPP, the banks will determine how this application form is actually used. Some banks will ask you to fill that out and deliver it to them in person. I anticipate many banks will actually put this online, and you'll be doing this online. But the application that you have here gives you a sample of the data that they'll be asking. The application and supporting documents will be filed. We recommend, after reading this, that you file them after the first regular payroll following the 56-day covered period. So after the first regular, and we'll understand the pertinence of that first regular payroll. I really like the fact that we were able to give you a sample completed application. It's a simple application that we're proposing, but it's one that I think will have value for a lot of churches. It assumes that there's no change in the full-time equivalent at the church, and it also assumes that you had no reduction in the salary and wage. So for those simplifying processes, we put together a sample application, and that was also sent to you this afternoon. So the first part that I want to do, Bill, is to make sure that we're very comfortable with these forms. And when you first get the 11 pages of this instructions, it really doesn't make sense to read through it from page 1 to page 11 because things are kind of in reverse order of what they really should be. So I'm going to teach you that we should look at page 9 first. Page 6 is what you look at second. Then you can look at page 3 and 4, and then the last page we'll look at is page 11. So let me go ahead and start talking about this just a little bit. So I hope you don't mind me doing this, but I'm going to run through these slides a little bit quick, but I'm going to do it twice. So I want to give you an introduction to the application. If you haven't had a chance to look at it, the first slide I'm going to look at is on page 9. So if you have a copy of it, go ahead and flip to page 9. I'm not going to go through all of the bullets that are on here that help explain it to you at a later point, but I want you to know that on page 9, this is a worksheet that you're going to make up, that you're going to actually keep for your records. This does not get submitted to the bank. So this worksheet has 2 primary tables on it. The first table is called a table that's going to capture a list of employees, their last 4 digits of their social security number. They're going to capture how much cash compensation you paid them during the 56-day period. And they're going to ask for you to calculate a full-time equivalent for that one person during that covered period. They've made it pretty simple for full-time equivalents. 1.0 is going to be anybody with 40 hours or more in a week. Anybody less than 40 hours can be a simplified assumption of 0.5. Dave, I don't know, are you going to teach us the harder way of doing that as well?
That's a pretty easy way.
Yeah, I don't think I'd want to vary from it very quickly.
Okay.
So I think that's the simple process. Table 1 simply captures everybody that is under $100,000. The PPP process has a stipulation that they capture $100,000 and higher compensations separately, and that's going to be done in Table 2. At any given point during this process, the maximum compensation that you can give somebody during the course of the covered period is $15,385. These 2 tables make up the basics for your payroll cash salary. So what's the next page I need to go to? Page 9 leads to page 6. Page 6 is called the Paycheck Protection Program Loan Forgiveness Application, PPP Schedule A. Schedule A pulls from table 1 here at the top, pulls from table 2 here in the middle. All 3 of these numbers came directly from those tables. When you come down here to the bottom, it then asks you for the non-cash compensation payroll costs. This is referring to healthcare benefits, and retention and retirement pension plan payments. That's as simple as it gets. That is all the payroll costs on one page. It's going to be your cash salary at the top on table 1, table 2, health benefits, pension benefits down at the bottom. Okay, that's the second page. The third page goes to page 3. Page 3 is the primary page. You might think that from the start that this is the primary page, but all the data kind of feeds from the back going to the front. So this first page, page 3, is really your summary page of your loan that's in place right now. You might have to get the bank might need to provide you some of this data. My bank has already told me that they're going to tell me what my loan number is. They don't know yet. They haven't told me, but they're going to tell me. They also know that there's a lender loan number and an SBA loan number. Those are both going to be identified by the bank and sent to me. I know some of the other things. I know the amount that I got. I know the distribution date. I know how many full-time equivalents I had. I actually, this number is the employees at the time of the loan application. This church had 3 at the time that they made their loan application. And then the employees at time of forgiveness. I still have those same 3 in place for my assumption. So that's the top of page 3. The bottom of page 3 is where all the data flows. So the top line comes in from the PPP Schedule A. That was the last page that we looked at on page 6. It's the payroll costs, total payroll costs. That was a combination of payroll cash, health benefits, pension benefits. That comes in on that top line. Then page line 2, 3, and 4 are all of your non-payroll costs. We know them as the interest, rent, and utilities. It's as simple as that. And then the rest of this sheet allows you to identify based on full-time equivalents and forgiveness. It identifies how much total forgiveness you will have based on the total spend that you reported on those top 4 lines. That really is the application. The rest of this, page 4, is a representation and certifications. One signature at the bottom. Once again, we recommend that if you do want to do a resolution from the trustees to allow that representative to sign on behalf of the trustees, just know that this link on that guidelines will take you to a sample resolution for doing that. And then the last page I have is page 11. It's a demographic information form. This allows you to, actually, if you were a single applicant, you would be able to put your name up here and your position and identify the demographics. This is an optional thing that you can submit. If a church would like to participate in this, it gets a little messier. They would really ask for a nonprofit to submit a separate form of this for each one of the board members. And so for each one of the trustees, if you wanted to participate in this demographic study, have each one of your trustees sign out that form. So let's go back one more time. And Bill, then I'll ask if there's any questions.
You've got a few.
I start off here and I say there are 5 forms to be completed, page 9, 6, 3, and 4. 3 of them require data. The first one is going to be a table of your employees and the amount of cash compensation they got and how much full-time equivalents there was. There's a table 1 and a table 2. That table feeds into a line on the next page called cash compensation. It's the top line and it's table 1. There's also a place to put table 2 data. So table 1 on top, table 2. And then you add in here your health benefits and your pension benefits. That provides you with a total payroll costs. Then the next page, page 3, introductory information about your loan with the bank, leads to the bottom of page 3, the input of your payroll costs from the Schedule A. Then you add in on this page, this is the first time that you've seen your non-payroll costs for interest, rent, and utilities. The bottom is all your calculations to show exactly how much forgiveness you get. And Bill, we'll stop there before I go through more details.
Okay. You touched a good nerve, Paul. A lot of good questions. Let's start with some basic ones. A few questions came in around the time period, that 56 days. And just to reiterate, was that 56 days from application or 56 days from when a church received their funding?
I'm going to answer that the next couple slides.
Okay. And will you also answer if it's calendar days or business days?
I'm going to count that. I'm going to have that too.
Excellent. So let's look at some employees. Some employee questions that people had were, let me find them again. Are 1099 employees included?
I'll have that as well. I'm going to give a short answer now and then we'll follow up. 1099s are not included in the payroll costs.
Okay. And when you were going through your explanation of full-time equivalent being 1.0, or if it was part-time, just listing it at 0.5, some people had specific questions. Would a 36-hour employee be full-time at the 1.0, or would they be considered 0.5, or is there a variation in between?
I believe the SBA guidelines are 40 and above.
40 and above, okay. And if they don't remember how many employees they listed as part-time versus full-time when they apply, will there be any kind of penalty, or what do you recommend for somebody to answer that so they aren't penalized?
This number right here is on their initial application. If they remember it correctly, there was a, let me think, Stacy, the numbers were, let's see, I think it was your monthly average. Or was
It's
it
your
a 12-month
average.
number?
Yes.
It was a monthly average, right?
Yes.
For 2019, that was the left-hand number. The middle number then was 2.5 times that.
Yes. Yes.
The third number on the right-hand side was this number. The employees at the time of the loan application is that third number on that line item. And we were told at that time to count number of heads, not full-time equivalents. So if you have pastor, choir director, and a custodian, that's 3 total people, regardless of how many hours they each spent.
Okay, there's a lot, and I'll say for our audience tonight, you're asking some excellent questions, and some are very specific to your local context. So if you have a specific to your local context question, we may not get to it tonight. So I'm sure you can follow up with Paul, emailing him through the conference website with some of those specific questions. I'm going to let you continue, Paul.
So I will say that we put the presentation together. We downloaded all the questions that people had, and Bill, we probably added about 25 to 30 additional elements into the presentation just to cover some of the questions that people would ask during registration. So I hope to see that a lot of those might already be answered.
Okay, so stick with us throughout the whole presentation, and if your question isn't answered, we can do some follow-up afterwards. Thank you, Paul. Carry on.
Okay, well, let me take you then through this goes into a little bit of a deep dive before we get to Dave. So just bear with it while we do a couple steps. I need to teach you something about the rules that we're going to be teaching here tonight about the cash payroll. And it's not every vendor is saying it the way that we're saying it tonight. We are open for different interpretations on this at some point, but I am teaching you tonight what we have been told by ADP, who is our payroll service at the conference. And to tell you the truth, I only know of one CPA who's teaching it differently. So let me teach you this way, and then we'll, as the SBA does more guidance on this, we'll see which way it ends up being supported. I knew we didn't want to do this presentation last week, the very first week that the guidelines were out. It gave us a chance to listen to a lot of experts on what they were telling you. And so what you are going to hear tonight is a compilation of what some of those experts have told us. And I give you the references here. There's an important reference in your forgiveness application that's on page 2 and page 7. The first one on page 2 refers to the eligible payroll costs. Specifically, in quotes, this is what it teaches us. It says the payroll costs paid and the payroll costs incurred during the 56-day covered period are eligible for forgiveness. Payroll costs paid and payroll costs incurred are thought of in this instance to be two distinctly different items. And I'm going to show you a two-step process that allows you to see how those will be added together. Guidance on page 7 talks about cash compensation being the total of gross salary and wages. It also includes the housing allowance. It includes any paid vacation or sick leave that you have, separation and termination leave to somebody. Forgiveness is capped according to this $100,000 cap that PPP contains with it to be $15,385. $15,385 would be what somebody who is being paid $100,000 would receive during 8 weeks of pay, if it was the same average pay per week over the 52 weeks. So that's the substance, 15,385. If you remember, we saw that in table 1. Table 1 could not insert, and table 2 could not insert a cap higher than 15,385 for pay that is made during the covered period. So Bill, we're going to do two things. Step 1 is going to be called identify the payroll costs paid during the 56-day covered period. That's going to be this first element. It's going to include the very next regular payroll on day 1 or later. So what's day 1? Day 1 was the day that you received your money. I've got a calendar on the next slide, so we're going to go through this a little bit. We're also going to include any back pay, whether it was worked or not worked, that was paid on day 1 or later. So far, so good. So that's going to be the paid. And then there's an element that's included in this phrasing on page 2 that the payroll costs incurred. We're going to read that as it includes the pro rata days earned during the covered period that are not paid until on or before the next regular payroll at the completion of the covered period. Now I put it in there that way so you can look at that page and study that line, because you're not going to get it when you first read it. So we're going to download that presentation. You're just going to have to look at that one a little bit. It is called includes the pro rata days earned during the covered period that are not paid until on or before the next regular payroll. So that's why we need a calendar. The next slide will show us that. The payment date is the origination of the ACH or the distribution of the paychecks. So ACH usually has to be posted early before it originated early to make it happen on the same day that you're distributing checks. So just know those might be actually two different dates in which you're doing payment dates. So Bill, here's where we get to look at the calendar, and I want to take a look at 3 cases. The first case that we're going to look at is going to be an example of a bi-weekly payroll in which they received their funds on May 5th. Okay, so it's bi-weekly payroll looking at May 5th. And the first thing we're going to do is look at how we've identified the 56-day period. We're going to call this day 1 up here, the day that the deposit was received. Just know you're counting calendar days, not just business days. So it's all your calendar days. So from Tuesday to Monday, that's 7 days. That's the end of week 1. Not on Tuesday, but on Monday. Monday ends week 1, and that's day 7. Subsequently, 14, 21, 28, and it goes all the way down to, I gotta move my pictures, sorry. Goes all the way down to the 29th. Now we're looking at May up here. Here it converts to June. June goes all the way through the 30th, and then July 1st. So the end of your 56-day period from from May 5th ends on on June 29th. So June 29th is your last day of your, what's being called now, your covered period. Now, let's talk about this a little bit. So the first thing we said was the regular payrolls within the covered period count, and they count in the full amount. So the first regular payroll that you have after day one is this one that's on May 8th. It's interesting to note that this is totally eligible. This paycheck is actually for the way that this payroll is being done. This is a payroll that runs from Monday to Sunday and then pays on the following Friday. So the period of time, actually this is a 2-week payroll, so bi-weekly. So the period of time for this first paycheck was from April 20th to May 3rd. For 2 full weeks, 14 days are located in that one payroll. But from the reading of the SBA guidance, the entire 14 days of that first payroll is included and eligible for forgiveness. Let's go to the next one. The next one occurs on the 22nd of May. It actually has one day in this period, May 4th, that was actually before day one. That's still part of that. And then it includes all the way up to May 7th. You actually get a couple regular payrolls in a biweekly schedule during this 56-day period. So you get 4 of them. Then the guidance says, look at the one more thing. Look at the first regular payroll after the covered period. It's over here on the left. So the first regular payroll after the covered period occurs on July 3rd. It's the first regular payroll after day 56. If you look at that, you look at the days, you have to look inside of that paycheck to know when it was actually incurred for. And for this paycheck, with this payroll system, it was incurred from June 15th to June 28th. June 15th to June 28th is all within the 56-day period. So the entire 14 days of that first payroll after the covered period counts. It's going to count for us. So you include that. So now you've been able to get 1, 2, 3, 4, 5 complete payrolls to count. They don't say anything about the next payroll, which would include the 29th of June. So we're not going to count that. So you get 5 payrolls of 14. You get a total of 70 days. Now, just remember, we're going to keep the housing allowance in there. And this is only for W-2 employees. So if you have a pastor who's receiving last year a 1099, today is the day you need to commit to give them a W-2. If you commit to giving them a W-2, there will be no impact because the pastor most likely has, call me if this is otherwise, but they most likely do not have any withholdings for federal or state income tax. And they definitely don't have any Social Security FICA withholdings. And so for you to convert them mid-year to from a 1099 to a W-2 will allow you to put the pastor into your forgiveness formula for the PPP. So please do that. I think everybody else that you might be paying as a 1099 might have a lesser role in the ministry, and I would not necessarily recommend that you convert them to W-2 unless you had a driving case to want to do so. Okay? And Bill, that's primarily what we've got here. I want to make sure that if there's any back pay that you want to make for people that were shorted on their pay or were not working in the March and April timeframe, that this is also the opportunity for you to make a back pay for those individuals, regardless of whether they worked the hours or not. A lot of people are making pay happen based on their PPP funding to make them whole for the lost hours that they were not able to work because of whether it's a preschool being closed down or the church being shuttered or not doing worship services and things like that. Just plan to make that back pay sometime after day one, and then it should be included in your total forgiveness. The next 2 samples I'm going to run through a little bit quicker now that you understand the concept of how we studied that. The next one I'm going to be giving you is an example of a monthly payroll paid on the last day of the month, last work day of the month. And it's going to be, and you're receiving the deposit on May 5th. So it's the same thing. Day one is going to be May 5th. June 29th is going to be the end of the 56. The first payroll after day one doesn't happen until all the way down on May 29th. That May 29th is the pay that's been incorporated into that paycheck. They actually pay forward a bit on this, so they're going to be reconciling with May 1st to May 31st. The entire amount of that gets to be counted towards forgiveness, even though some of those days occurred before the 5th of May. The next paycheck that occurs is a regular paycheck that actually occurs after the day 56. So a monthly payroll here has to take a close look at this first payroll after the covered period. The provisions here state that you can only count as eligible payroll costs those days that were actually incurred during the covered period. For this paycheck on the 30th, that only includes June 1st to June 29th. It does not include June 30th. June 30th is actually outside of your 56 days, so you don't get to count it. So when we total these days, you get 31 days here for May, and you get 29. You get 29 30ths of the pay that was made out on the 30th, you get to count. So essentially you get 31 plus 29 for a total of 60 days when you look at this monthly payroll cycle. The concept here can be applied to your situation just as easily. Make sure that you're looking at a calendar, put your day on the calendar, properly count out your 8 weeks for the 56 days, talk about where your regular payrolls are in relationship to that, and start talking about those days that are actually incurred during your payroll. And Bill, there's one last hard concept here, and it's called the alternate payroll covered period. They give you a chance. First of all, I would say that these monthly payrolls that we looked at in example 2 and this bi-weekly payroll is example 1, these numbers of 70 days or 60 days are going to be pertinent to exactly your scenario for those days. And I think it really will be different for everyone as you look at exactly what days are being incurred when you actually make your regular pay days. So there's a lot of variables there. Those variables are brought together in this slide that talks about the alternate payroll covered period. And the alternate payroll covered period simply allows you to see here that what they're going to allow you to do if you're in a bi-weekly or a weekly payroll, you can consider this change. And you're going to do this change. You're going to get rid of this day 1 definition. You received the money on May 5th, but you're going to scrub that in favor of calling your day 1 this first day of the first regular payroll after the PPP is received. One more time, the first day of the first regular payroll after the PPP is received. So my money is received on May 5th. My first regular payroll that starts after May 5th, these are weekly payrolls. They go from Monday to Sunday. So the first Monday of my payroll cycle is now the 11th. That's the first day of the first pay period after the PPP funding. It doesn't matter when that's actually going to be paid. That May 11th number doesn't actually get paid until down here on the 29th. But nonetheless, day 1 now becomes that. Everything else in green gets set to the 56 days. And now you have the same rules. You're going to go back and you're going to do regular payrolls, anything after day 1. That means you don't get to count this one because you've redefined what day 1 is, but you do get to count this one on the 15th, and you're able to do 1, 2, 3, 4, 5, 6, 7, 8 payrolls on the weekly cycle. After 56 days, you get 1 additional payroll to take a look at. The earned days on that last payroll was the June 22nd to the June 28th. June 22nd to June 28th is all part of your 56 days, so you do get a chance to record that. The total number of pay periods then becomes 9 7-day periods. A weekly pay schedule always turns up 63 days. And if you were to do this for the biweekly pay schedule, it would always come up with 70 days. So this is one advantage of the alternate pay covered period. It can be used for those people who pay biweekly or weekly, and it automatically gives you 63 days and 70 days when you do the math to be able to determine that. So if you have either one of those pay schedules, compare that to the other way. Day one traditionally marked here, day one traditionally marked. Compare those to those two options and find out which one gives you more pay days for the cycle. That's a difficult topic, I think, Bill, and I might just ask if there's any questions that I might be able to help before we continue the last part of this.
There are some very specific questions, because what I'm noticing in our questions, every church is on a different payroll schedule.
Yep.
They even have, if they have an employee, so some pay their pastor bi-weekly and pay other employees weekly. How would they line that up for the forgiveness
If you have two pay cycles.
in the same organization?
Yeah, within the same organization. So we actually used to have that at the conference center. You know, if I were faced with that, I think I'd standardize to one payroll cycle to get me through the covered period. I'd be willing to take a consultation call with anybody to talk that through as well. But I personally think that the first answer I'd have is try to standardize to one payroll cycle for both, for the period of time that you're trying to do the payroll forgiveness formula.
So I would suggest we had several churches that have some different payroll schedules, from prepaying some employees to shifting schedules. So for those, reach out to Paul afterwards. I do like to remind people, this is a good time to remind people that we are recording tonight's broadcast, and the recording and PowerPoint slides will be available later this week on the conference website. I don't know if you'll get to this, but a lot of people are just asking, you did mention housing allowance was included in payroll cost. What else can people include in their payroll cost?
We'll go back here to the cash compensation. Cash compensation is the gross salaries, housing allowance, paid vacation, sick leave, separation and termination. Those are the elements that come from your cash compensation. And then you can also, we're just getting now, Bill, to this part that talks about the non-cash payroll. And that's simply going to be called the church portion of health flex benefits and pension benefits. How about if I use that as a stepping off stone to complete the details here?
Take it away, Paul.
Okay, the eligible payroll costs that are non-cash include the church portion of health flex and pension. We've been advertising this. Westpath has come out and guided us to make sure that your pension only includes the direct benefit, defined benefit part of CRISP, and the direct contribution aspect of CRISP. These are the church portions that are being paid, and it does not include the CPP portion outside of the boundaries of what the pension would allow. We're going to say that the eligible payments can be for past due, current, and we're going to put in here prepaid benefits, but I need to read these three bullets real fast for you. The statements for our benefits from the conference will be issued on the 1st of June, 1st of July, 1st of August. Normally we wait until we are able to post all of the month receipts the prior month, but for PPP, we're going to make sure that it gets out on the 1st. Just realize that's a little bit of a challenge on July 1st because of the appointment changes, but we're committed to having those available. District offices are all working with us to make sure that those are accurate on July 1st for billing. And I put in here the FAQ from Westpath, gave guidance on May 14th. They are really recommending that we take a close look at this prepaid benefits still, and that further clarification will be coming. I don't include this in and or out at this point. I'd love to be able to include prepaid benefits, but just know that there's going to be some additional guidance on this. Let's just keep that as a lower priority for right now. You do not get to include parsonage expenses, pastors' accountable reimbursements for travel or continuing ed. You do not get to talk about lay travel allowances You do not count workers' comp insurance, and you do not get to count for laity any matching that the church is doing for their FICA taxes, the Social Security and Medicare. When it comes to the non-payroll costs, I'm going to get this slide out quickly and then we'll take questions. The following payments are eligible for non-payroll costs if paid or incurred during the 56-day covered period, as long as these non-payroll costs were in effect before February 15th. These are your utilities, rents, and interests. So what does it mean to be incurred? Incurred says you can count it if it must be paid, though, on or before the next regular billing date after the covered period. So here's what we have. Paid utilities and rent can be past due, current, and prepaid. Utilities and rent, past due, current, and prepaid. Quarterly payments do not need to be prorated to reflect 8 weeks. So if you make the payment during the 56-day period, you can count that even though it's for a quarterly payment. Paid debt interest can only be past due and current. You cannot do any prepaid on interest. That's very clear from the guidance from the SBA. And then costs should be billed to the church and paid by the church. So if you have a bill from a vendor and it's in the church's name for that utility bill and you pay with a church check, then it counts. One exception, if the pastor is in the parsonage and is actually being reimbursed for that expense, I think we need to talk that through and find a way to be able to count that. The church should be making a payment to the pastor, reimbursing an actual invoice from the utility perhaps, and I believe that we should be able to find a way to allow that to count. Eligible expenses, utilities, this is your list. Gas, propane, electric, water, sewer, telephone and cell phone, cable and internet, fuel for church-owned vehicles. That's what people are calling transportation. Fuel for church-owned vehicles. Building and office equipment rent, mortgage interest, construction loan interest, business car loans. If you have a bus, car, loan, interest only, no principal on any of those. This is your do not list. We see these of all different varieties. Some of these date back early into the PPP, but you should not be counting septic cleaning, trash pickup, recycle, lawn care, outdoor maintenance, VPN service, IT support, email service, travel reimbursement, cleaning supplies, sanitizing services, and you can't do unsecured loan interest. One last slide, Bill. This is my last detail. Wanted to make sure that we had a good summary slide for the forgiveness. The good faith certification says that they are going to, I need to read this, the PPP funding of less than $2 million will be assumed to have performed the required certification concerning the necessity for their loan requests in good faith. There was a lot of conversation. We had a lot of consultations around this to know whether or not people should keep the funding. Just know that that has been clarified by the SBA to say that anything that is less than $2 million is going to take on the assumption that you performed that in good faith. Covered period. There are two ways to determine using your regular payroll. We already talked about that. One is going to be called the covered period. The other one is called the alternate covered period. Back pay, we covered that. PPP can be used to pay church staff who did not receive paychecks or received a reduction in pay since the church was shuttered. Prepaid, PPP can be used to prepay rent and utilities. Benefits, pending classic clarification, right? So we're going to be asking Westpath for that. Bonus pay, there is no restriction on the books right now that allows you to say that you can't include bonus pay, but just know that we believe that it will be limited by this $15,385 for the total compensation that someone can receive during that covered period. One person asked the question, would you please prioritize all of the expenses that can be claimed? And if you're looking for a list, this is the confidence list for me. The first one, please include all of your cash payroll that are regular or back pay. The second level, I would say would be your current and past due benefits, pension and health. The third priority, I think, is your current and past due non-payroll. That's your lease, rent, and utilities. I think number 4, put the prepayments at the back of this line, try to get it covered without the prepayments. And the 5th one, try to get it all covered without the bonus pay. And Bill, there's one little caveat that comes in, and they do think that maybe at some point this 8 weeks will be a non-issue. If the SBA looks at this, they might take and extend this 8-week period. And I just wanted that to be part of our presentation tonight, that maybe that will come down through the loops over the next couple weeks.
And someone did ask about that they're hearing through one of their accountants that they may extend the expenditure of PPP funds. So have you heard anything around that yet, Paul?
Nothing definitive. It's all talk that I've heard so far. I've not seen anything in writing. Certainly, if anybody's seen anything in writing, I'd appreciate having them send it to me.
Excellent. And a couple of people have both said that their banks told them that housing allowances could not be included. Does the SBA guidelines supersede the banks, what they're being told by the bank?
Yeah, some banks were told that advice early on, and it is actually an SBA. Let me see if I've got that annotated. It's actually an SBA guidance. It's an FAQ from the SBA that addressed exactly that issue. And if somebody were to write me an email, I would give them and cite that reference to the SBA guidelines so that they could show their bank in detail that it should be included.
Now, one of our viewers wants to know why unsecured interest is not included.
Unsecured interest. This gets into some things like credit card interest. We don't read anything about that type of consumer interest that would be paid and counted. Everything that is talked about in this talks about principal and interest. And I'll have to come a little bit more clearly on that to give you the guidance that allowed me to put that on the slide that way. I did that because I found it somewhere, and I just need to remember that reference, Bill.
Thank you, Paul. We have a number of churches that have daycare centers, and their daycare centers operate from September to May, and then their teachers don't generally work over the summer. Will that be considered employee reductions by the PPP if they normally don't work during the summer?
Pierre and I actually have a slide on that we'd like to be able to get to before we conclude tonight.
Okay, excellent.
How about if we move forward with Dave, and Dave just has 2 slides to be able to show.
Excellent. Carry on, Dave. Welcome. Welcome back, Dave. You're muted.
All right, I'm unmuted. Hello, everyone. I wanted to cover in my slides in more detail what Paul mentioned earlier in the presentation, which are 2 areas where a church needs to pay attention to because they can reduce the loan forgiveness amount. And the areas we'll be covering is the staffing reductions when looking at headcounts or FTEs or full-time equivalents, and also the reduction in hourly rates or salaries. So it is very easy to get into the weeds on this subject. I will attest that myself. However, you should know that the overall overarching concept is the government is trying to give you as many possibilities to not trigger these items. And I will go through some of the exceptions. But before I do, I wanted to talk about full-time equivalents. Paul touched on it. I found a good definition on a HR resource website. The calculation of a full-time equivalent is the employee's scheduled hours divided by the employer's hours for a full-time work week. So if the employer has a 40-hour week, and the employee works that 40 hours, that is 1 full-time equivalent. some churches don't have a full 40-hour work week. So if an employer with a 35-hour work week has an employee that works that 35 hours, that is still one full-time equivalent. So again, try not to get too caught up in minutia and as Paul said, rounding to the nearest quarter hour is certainly fine. The reason that these full-time equivalents are used is the SBA wants to make sure that your headcount or FTEs did not go down. That's the whole idea of the PPP loan. And the loan forgiveness will be reduced based on the failure to maintain the average number of full-time equivalents during the covered period. So that's in comparison to the covered period or alternate coverage period. So when you were looking at your full-time equivalents, you were looking at for non-seasonal, it's going to be February 15th through June 30th, 2019, or January through February 2020. If you're seasonal, it's February 15th, 2019 to June 30th, 2019, or did not have on the slide, it's any 12-week period between May 1st and September 15th, 2019. So that's your baseline. That's what you're going to be comparing your full-time equivalents to during the covered period. So in that second bullet point, it says forgiveness amount will not be reduced by a failure to maintain your FTEs if your average FTEs between February 15th and April 26th is lower. So that period has been picked. Some people are calling it the COVID reaction period or a knee-jerk period. And they understand that some employers, especially as things were being fleshed out with the various types of government plans, that some employers may have lowered their FTE count during that period. If that is the case with you, you just need to make sure that you restore the level of FTEs by June 30th, 2020 to be where you were in that comparison period or higher as of February 15th. So don't worry if you have a blip in your full-time equivalent count during that initial period. As long as you restore the level by the end of June 30th, your loan forgiveness amount will not be reduced. I've seen quite a few questions come through that touch on what I'm going to cover next. Laid off employees, again, some employers immediately laid off staff. If laid off employees came back, that will not reduce your loan forgiveness. If you laid off someone and you made them a offer to come back and they refused to come back, that does not count against your full-time equivalents. So keep that in mind. If that's the case, make sure you have documentation that you made a good faith offer to rehire that person at the same salary or wages, and have all that documentation available. I also saw quite a few questions about people who were lowered your full-time equivalent count because of situations beyond your control. This is people who voluntarily resign, reduce their hours. Some people just did not feel comfortable coming in and continuing working because of their concern about COVID. So, or somebody who was terminated for cause, someone who you would have terminated has nothing to do with the COVID outbreak. Again, these situations do not count against your full-time equivalent. So anything that's outside of your control as the employer, when you're doing your calculations, that will not count against your full-time equivalent and will not reduce your loan balance. So I'll move on to the wage reductions. So reducing the amount you pay your employees may reduce your amount of forgiveness. And again, the 25% is the threshold here. Same goes with full-time equivalents. The government is trying to give you as much leeway as possible. So a full-time equivalent reduction for an individual employee has to be more than 25% to trigger a loan reduction. And similarly, the salary and wage reductions have to be more than 25% to be counted against your loan forgiveness. So here, the look back period that you're comparing to is when you're making your comparison is the period January 1st through March 31st, 2020. Again, just like full-time equivalents, the government is making some concessions and understanding that in the period between February 15th and April 26th, you may have reduced your rate of pay in a reaction to the COVID crisis and trying to lower your payroll very quickly. You just need to make sure that those rates of pay are restored by June 30th. And the key here is the pay rate. We understand that you can't make up back pay. This is you are restoring the rates of pay. So salary or hourly rates, they need to be restored by your June 30th, 2020 deadline. There's been guidance as well to make sure that when you're looking at salary and wage reductions, this is outside of the reduction in pay that someone may have experienced due to a reduction in the actual time worked or hours worked. So when you are looking at these things, keep them separate from each other. You're not combining these two factors together to look at the impact. It's each of these items are looked at individually. So those calculations are done on your worksheet. And again, it is on a per employee basis. So if one employee drops down their FTE or their salary wage reductions in excess of that 25%, it's not going to trigger a reduction for the entire workforce or all of your employees. You will simply make the adjustment on the worksheet as it shows you just for that one employee.
Okay, we're gonna grill you a little bit, Dave.
Thank you, Dave.
Couple of questions that have come in, and I think we have some of the sharpest viewers of any webinar across the connection. Someone pointed out, Paul mentioned in the SBA documents that someone is considered a 1.0 full-time equivalent if they work 40 hours, but you mentioned 35 hours could be 1.0 full-time equivalent. Which is correct? I tell you, they're paying attention.
Yeah, so that's very good. So Paul went back and there's a page 7 in the SBA application for forgiveness. And under average FTA, the way that they stated in there, it says for each employee, enter the average number of hours paid per week, divide by 40. And it says later on that the simplified method says that you enter 1.0 for employees who work 40 hours or more. So, Dave, I think you've got good guidance, but I think we're going to have to get a clarification with the SBA. It seems to make sense what you've learned from the CPA, that 35 is 35. That should be a 1.0 if that's what your normal pay cycle is. You believe the same?
I do.
Yep. So just know PPP's been that type of an exercise for us. We can point you to the letter of the law on page 7, but we would eventually end up saying many times that try to find somebody at the bank if you've got a relationship there to make sure that you're doing right by the bank and what they're going to accept.
And Paul, correct me if I'm wrong, but I also see it as the calculation that you use, as long as it's consistent in looking at all those periods, you should not run into problems.
I think that's probably fair as well. Bill, can we go on to Stacy with the documentation?
Well, a couple of more questions about this full-time equivalent. One church is asking, they're a little confused. They have 2 40-hour employees and 4 20-hour employees. How do they account for those part-time 20-hour employees? Would they be at the 0.5?
So 20-hour employee is a 0.5 FTE.
0.5
So,
FTE.
so 0.5 and 0.5 for each of those 20-hour employees.
And we have a couple of churches who have mentioned that they are receiving new appointments in July that are going to be at a lower salary than the clergy person who is leaving. How is that taken into consideration with the PPP?
I'll defer to the CPAs on that one.
I think I want to do a consult call on that one, just to make sure that we have all the numbers in front of us, Bill.
Okay, so if you have, so I would just say for those who are watching tonight, if you have some changes in employees due to retirements, due to transitions with clergy, and there is some overlap and some differences, reach out to the finance team after the presentation and discuss those particular contextual things. So that would handle our questions for now, and we can move on to Stacy's portion.
Thank you,
Thank
Bill. Now, just for time management here, we're doing documentation next, and then Pierre and I have 7 scenarios to go through. 3 of them are preschool related, 4 of them are more general in nature. So we're piquing your interest to be able to stay with us as we're going through some difficult material here. Thank you. Stacy, all yours.
Good evening. I am going to talk about documentation that is specifically needed to file with your forgiveness application. And I have broken it down into items that we're going to actually submit with the application, and then items that we're going to maintain with our files. And then within those 2 categories of submit and maintain, I have items that would pertain to payroll costs, and then items that would pertain to non-payroll costs. So obviously the first thing that needs to be submitted is the loan forgiveness calculation form. That's the master form that the items from the PPP Schedule A and the Schedule A worksheet flow to, that Paul referenced earlier in his section. And then the PPP Schedule A also, that completed form will also be submitted with the forgiveness application. With regard to payroll costs that are going to be referenced in Schedule A in the worksheet, we're going to submit bank account statements or third-party payroll provider reports that document the amount of cash compensation paid. By bank account statements, I mean copies of your statements showing if you're paid via direct deposit, the items going out, either in a lump sum, and list the direct deposit day and the taxes paid, or by individual, depending on how you do it. Your bank statement displays it. Or your third-party payroll provider will also have some payroll registers and or forgiveness reports. I know ADP is developing some forgiveness reports that are also going to demonstrate this information for you. So payroll registers and forgiveness reports, ADP, Paychecks, all of those are third-party providers. That's going to demonstrate the cash we've paid to our employees. Then there are the tax forms and or third-party payroll provider reports, the 941 specifically, which is going to demonstrate how we have reported these same wages that we have said we've paid the employees. We are reporting those same wages to the IRS. And you'll notice after 941, it says have been filed or will be filed, because 941s are filed quarterly, and our periods here, our covered period that we would be referencing, the 941 might not be filed yet, but would have been completed, or we would have a third-party payroll provider report to use that we can, again, submit with the application. And then with those are the items for payments to employees. Then with regard to payments for benefits, such as the health flex, the employer side of the allowable pension for the retirement plans, we would submit payment receipts, canceled checks, account statements that document the amount that the employer has paid for the covered period in those amounts for health insurance and retirement plans. Or if you are auto paying, online with us, like so many of you do, documentation from your bank statement that shows the payment going to BWC, things like that show that. So that's the documentation that will be submitted with regard to payroll costs. Then there is actual documentation that needs to be submitted with regard to the FTE calculation. Now, you'll see down lowest on the screen there's two FTE concepts we're looking at here. One is an FTE, a full-time equivalency that pertains to our reference period that we are calculating. And then we have a choice there. We can either choose a reference period of between 2/15/19 and 6/30/19, or 1/1/2020 and 2/29/2020. If you're a seasonal employer, that's a special calculation. Your employer, you want to choose whichever one of those periods best represents the business earnings and employee earnings that you're trying to compare with your PPP dollars, because that will give you the best comparison. And that's a choice each employer can make. You just have to document those. How do you document those? Tax reports, 941 quarterly filings that pertain to those periods. There is a line on the 941 that says number of employees on the 12th day of the pay period. Every employer fills that out as they submit that each quarterly. That's the document you would use to submit that would show I'm using this for this period, and here's my documentation showing I had 3 employees on this pay period for the whatever you choose, A or B, for your period, for your reference period. So that's a choice that each employer can make. And that reference period for the FTE calculation is what's going to be used as a comparison for your covered period for the FTE calculation, for which we have received the PPP proceeds. That's what allows the SBA and your lender to see, did you increase or decrease in FTEs, and thusly, is there any increase or decrease in what we can forgive? If we could go to the next slide. Then at the top of this slide, again, I'm just reaffirming that we submit this calculation, and then the support for that calculation for the covered period is, again, your payroll tax filings that encompass the quarter of whatever your covered period is. Like Paul said, if you received your proceeds April 20th, that would be in the second quarter of 2020. So it would be that second quarter 941 that you would want to use as documentation to submit to show the number of employees that you have listed there with your application. So the payroll costs and the FTE calculation all pertain to payroll costs and documents we're going to submit with our application. There is non-payroll costs that we are allowed to use for the PPP money, and the specific documentation that we need to submit with the application for business mortgage interest payments is a copy of your amortization schedule and receipts or canceled checks verifying the payments that you made during the cover period. Or you can use a lender account statement that shows the payments coming into your account for your covered period. If you use the lender account statement, please note you must use 1 month after the end of the covered period verifying the interest that was paid, because lenders sometimes break down that statement for interest and principal so that we're able to see and only apply the interest that we're paying for mortgages. Business rent or lease payments, we want to submit a copy of the current lease agreement and receipts or canceled checks that verified payments for the covered period. Or if you have your landlord or lessor can give you an account statement from the baseline of February 2020, and I apologize, I didn't mention that in the mortgage interest payment. You want the baseline of February 2020 proves that that liability existed before you applied for the PPP. And for the non-payroll costs, we want to substantiate that we had an existing obligation. Note, it says verifying existence of the obligation and then payments during the covered period. That's the need for the statement from February 2020 for these, and then also for the covered period. Let me see, where am I at? Oh, and the lessor can also provide you, I apologize, the statements for the covered period and 1 month after, verifying the payments that were made for business rent or lease. Utility payments, again, you want to submit copies of invoices from February 2020 because they substantiate that that obligation existed at the time of the PPP. And then we want to submit those paid during the covered period, copies of those invoices, along with receipts, canceled checks, or an account statement if perhaps there's a running statement that shows the payments that are coming in for all your utilities. Non-payroll, we want to verify that the obligation existed prior to the PPP receipt of dollars, and then we want to verify the payments made during the covered period of our PPP. And we could slide to the next. Those two slides cover what the borrower needs to submit with the forgiveness application. Now we're going to talk about what you need to maintain, you need to complete, but maintain with your forgiveness application and data. As Paul walked through with you earlier, there's a PPP Schedule A worksheet that you will complete. You want to keep that with your files. You do not submit that to your lender. The documentation supporting each employee that's listed on the Schedule A worksheet, and including the salary, hourly, wage reduction calculation, if that applies. And then you want documentation supporting the listing of each employee on the PPP Schedule A, the table 1 and 2. Paul showed those are the differences for employees who are either compensated over $100,000 annually or under $100,000 annually. They're just broken out on 2 tables. You want to keep documentation supporting each of those employees. That's your payroll files, things, you know, what people's current pay agreement is on, you just keep those on file. Then this is also important with regard to what Dave touched on and the safe harbor. If you have any employees that you have laid off or furloughed during this period, you want to keep written documentation of any job offers, refusals to work, firings for cause, resignations, anything during this period, because that can, you will not be penalized for that in the forgiveness process if there's a bona fide offer and the return did not happen. And then any support that you have for your FTE, if your full-time employee equivalency went down, you want to keep that on file as well. It just documents in general, you would not be getting as much forgiveness as the full 100%. And then any other documentation that you submitted with your application initially back in April, March, end of March, early April timeframe, any documentation supporting the first certifications that were made as to the necessity of the loan and the eligibility for the loan. And then for retention policy, please note to keep all of this on file for 6 years after the date the loan is forgiven or repaid in full. You will get a notice from your lender of the day the loan is forgiven. You want to keep that and any documents from 6 years from that date on file. I would keep it in a separate file just so it's easier to track. Not that anyone's going to come looking for it, but it's easier to reference. A tracking form, which is this you can do in a basic Excel spreadsheet, is probably going to be very helpful to allow for successful documentation of everything. I have a sample here of a very basic one. It's just an Excel spreadsheet. It has just dummy company information on there, but you'll see it has a PPP loan amount at the top, the date the proceeds were received, it says 8 weeks date, that would actually be your 56th day date, and then it goes down and lists your employees at the bottom. Those gross wages funnel up by a formula into total wages paid by week for the period. And then there's a section for non-payroll costs as well, rent, electric, what have you. You can total those over to the far right and at the bottom, and it just allows you a quick and dirty way to track these expenses. For our purposes, we have elected to use an Excel spreadsheet. I did not put it here, but I have a master spreadsheet with our total, same thing, the total proceeds, date funded, expiration date, and I have transactions by type, and I've broken them down into payroll costs, employer paid benefits, and AP transactions, accounts payable transactions for non-payroll costs. And I also have the general ledger reference number for those transactions. I have subsidiary spreadsheets for each of the 3 types I list above. Again, payroll costs, employer paid benefits, and AP transactions. And then I have those subsidiary spreadsheets broken down by expense account for each of them. And it allows for very quick tracking to see where I can find something in my general ledger. And then it goes back up to my total very quickly. And that is all for documentation.
Only one question came in, Stacy. You were so thorough. People would love to see your Excel spreadsheet. I've seen the work you do on Excel. It's wonderful. Could we perhaps?
Yeah, this is just a dummy here. Mine is, this is not mine. This was a quick one. I was trying to be as simple as I could. I didn't want to complicate things for people, for users.
So if you could send it to me, or we could post it with the rest of the resources, that would be great. But I'm going to let you carry on, because we're going to go over a little bit, people, but what we have left to cover is very important. So please stick with us. Thank you so much, Stacy. Paul, take it away.
Thank you, Stacy. Okay, we're going to close with 7 scenarios. So these came directly off the questions. A lot of the information already has come off the exact questions were asked at the registration, but these in particular came in as scenarios that we thought we'd tee up at the very end. So Pierre and I are going to do this. Pierre's been very busy during this conference writing answers, haven't you, Pierre? This is your sound check, Pierre.
Absolutely.
Absolutely. Well, thank you very much. Okay, so Pierre, we're going to do a tag team here. So I'm going to tee up some of these scenarios. Pierre and I have been taking a lot of consultation calls since the PPP program got in place. We've learned a lot from talking with all the local churches. Really very good conversations. We've learned a great deal by talking with each one of the churches through this, and we just love the ability to then share that with everybody else. So Pierre, this is an example of a church that, they've this prepaid. We're not sure whether we're going to be able to do that especially for the benefits side of this. We're going to look for Westpath to give us that, but we want a contingency plan in place. And this church was saying, I don't know if I'm going to be able to spend all of my PPP money that I received. And so what is the process for returning that unspent money? And is there a fee if we return it on the first day after the 56-day period?
This is a very common question. And I think people need to understand that the interest is accruing from day one. From the time the funds are deposited, interest is accruing. So if you receive 100% forgiveness, the accrued interest is forgiven. If you receive partial forgiveness and pay the remaining amount back immediately, then you need to work with the bank to find out if there is accrued interest owed. The other scenario is if you receive partial forgiveness and you choose to keep the remaining amount, then the interest and payments are going to be deferred starting at the covered period for 6 months. And the total life of that loan is actually 2 years. So first of all, there is interest from the time the funds are distributed. And second of all, the interest and the principal payments will be deferred for 6 months. So those are the 3 scenarios.
Okay. Thank you, Pierre. Okay, the second one, church had a couple things going on. So when they got into the shuttered condition, they reduced the pay salary for some of their staff. And so they have this question, can we use the funds, the PPP funds, to pay salary to make up the difference when they shorted the payroll during the couple months they'd like to know whether they can pay that back. And they also know that they're into some technology challenges, and they are thinking about hiring a temporary employee to help with their virtual services. And so can that person's salary be included in this forgiveness?
As we mentioned before, during the covered period, back pay can be paid. So in this instance where employees were not paid before for a variety of reasons, then the monies that are for back pay can be included and can be paid and can be subject to the forgiveness. The second thing is regarding hiring the temporary employee. If you hire that person as a W-2 employee, then certainly those funds or those salary amounts can be included in the forgiveness. And also one thing is the bonus is that it can be included to help maintain your FTE against any losses that you may have experienced. So it's a win-win situation.
Very good. Okay, so we're kind of going swimmingly well through these. This third church called, and they said, my church is not the lead church, so we do not issue a check specifically to the pastor. And they want to know if this is going to present a problem when they ask for forgiveness, and how should the church document what the church is paying the pastor?
I think the primary source document is the clergy compensation form. And that should indicate what proportionate share that church should be paying. It not only applies to the payroll, but normally applies to the benefits too. So they can use that information, a charge conference form. Also, they can get, they should be able to get a receipt from the lead church indicating what they've paid both in payroll and for the benefits.
Okay, thank you. And this one impacts some of our churches. So my pastor is on a work visa, and this church called and they said they wanted to understand whether they had any restrictions on claiming their salary and benefits as part of the PPP forgiveness.
The SBA has made this very clear that the PPP funding is limited to employees who have their principal residence inside of the United States. This also includes those visa holders who have a B1, F1, H1B, O1, E2, EB3, and L1. It specifically indicates that any persons who are on a H2A and a J1 visas are specifically excluded. Most of those are related to agriculture.
Yep. So some visas have a principal residence inside the United States and some visas do not.
That's correct.
So you have to know exactly what type of visa you'd be working with to know which category you fall in. Pierre, do you have some questions that you'd like to ask me?
So Paul, I'd like to quiz you for a couple of these scenarios. And the first one is concerning, there's a lot of questions about preschool. Preschools, camps, nurseries. And the question is, has something to do with seasonality. Will a church that operates a preschool that is closed for the summer be considered a seasonal business for determining forgiveness? And if so, what reference period should they use in measuring their FTEs?
So I think this one, we had to think about this a couple different ways, because the first way that you think about the seasonal option, just know that we talked about this a couple different times, but you're being asked during the FTE comparisons to identify a reference period for full-time equivalents. And that's either going to be earlier this year, or it's going to be a comparable time last year, February to June of 2019, or it's going to be this seasonal between May and September. And we oftentimes thought that was summer employment, summer camps, things like that, when people were having high periods of activity during the summer and then shut down during the rest of the year. But it actually does work for a preschool to think of it just the opposite direction, that they are not operating as heavily in the summer months. And so they might want to benchmark their reference period as being this low point when their preschool is actually shut down. So you might be able to say the seasonal reference for the preschool would set a lower full-time equivalent for comparison to the covered period. And so that might actually help your equation. So Pierre, I like that option. I would also offer to this church that option 1 and 2 give you similar protection on the FTE if you are choosing to do any kind of back pay during the covered period. Any back pay that you give to your preschool staff during the covered period will count them as a full-time equivalent during the covered period, and it will make you look as if you never lost headcount from whatever your reference period was, for instance, January and February earlier in the year. Okay? Do you have another preschool question?
This one is similar to the preschool and relates to nurseries. Our church has a nursery school that has now ended for the summer. How do we deal with this regarding calculating FTEs and comparison periods to maximize forgiveness? This question is similar to scenario 5 in that if staff normally would not be working during this time because of the time of the year, which preschool is closed, can we redefine some of their responsibilities for this time, pay them, and include them in the PPP forgiveness?
So we've actually heard of some churches who are, when they're talking about redeploying their preschool, they're talking about Vacation Bible School, for instance, or some other children's ministry where they would be able to be paid during the covered period and then therefore look to be an FTE. I think you have two processes here. The key is to include the nursery school employees somehow during the covered period so that they're receiving compensation. I think there's two ways to think about their compensation. One is back pay, to simply pay them for the hours that they missed in March and April and May, to simply do back pay. And then the alternate is what this church might be suggesting, and that is to employ them doing alternate purpose. And is this the last one that we have for a scenario?
This is the last one. As a ministry of the church, the preschool and church payrolls are combined. However, the preschool's loss of income from before and after care during the pandemic was a factor in us applying for the loan. The preschool, even though the payrolls are combined, typically pays the church for use of their building, helping to cover their proportionate share of cleaning, utilities, and other building expenses. We don't have an official written lease with our preschool. We recognize the preschool payment to the church as an eligible rent expense?
Pierre, I think there are two major things working here. The first one we can pull from page 10 of the forgiveness application. The eligibility of rent payments will require the submittal of a copy of the current lease agreement or an account statement from February of 2020 to validate the existence of the lease. So without those being in place, I believe you will not be able to meet this standard for counting the preschool payments to the church. I also think there's another standard that could be viewed here as well, and I think it's a high limitation that the payment would only be viewed by a bank to be within the same organization if the preschool is not separately incorporated with their own PPP source of funding. Okay, well, thank you, Pierre. That was, you gonna go back and answer some more questions?
Not today.
Okay, well, thank you. Bill, we just have a little wrap up here. I wanted to put out one little note that the Maryland grant is something that we pushed hard for with churches at the beginning of the PPP. I actually received something from our bank, and maybe I heard it from the state, but the funds ran out. Many people got the same notice. I saw that today. Essentially, it funded 2 days worth of applications, and that was the $10,000 grant for Maryland. I only knew of 2 churches who actually made it through that process, and I actually lost track of them halfway through, so I'm not sure if they ever got that money. BWC initiatives I wanted to put in front of us just to allow us to see that we're still working off the 3-month waiver that's going to be posted in October. That's $2.6 million on the Board of Pensions waiver for the 3 months of pension and medical benefits. We're still working on the 1.1 million. Some of that is actually what Bill and Lauren have done for pushing through the tech grants. Bill, how many tech grants do you have? 86 is what I think I remember hearing.
I don't know who you heard that from, but I'd also say Rodney Smothers is a part of that team as well.
Yes,
We've
exactly.
had 67 grants
67.
applied for. So you have some of the numbers correct, but 67 applied for, and those who are receiving it are getting notification actually today about that.
Very good. Thank you, Bill. 321,000 went out for small church grants, and we still have the safety allocation for relief grants. As a conference, I think it's very telling to know that we have not had one church need to access this relief grants, that were simply there for payroll stability at a church that was not able to pay their pastor. So it's a real blessing for us to stand before you tonight and let you know that the payroll stability of the conference is still intact. We certainly appreciate all the efforts that churches and a lot of volunteers doing the PPP funding. We know that it's not been the easiest path to learn what was needed for you to support your congregations. And we just really want to let you know that by all of the churches working together, that is the result of all of us working together in order to allow payroll stability to be in place in such a troubling time. And we close, Bill, with this insight. Here's the registration website. We have the materials at this website. This is where you go for your consultation. Pierre and I are actively still pursuing 15-minute conversations with people, and we just really love doing the Zoom to be able to get fully serviced. And they're right quick. They happen right quick, and people leave happy.
So leave
Bill,
that
thank
up
you
there
for a
for
good
moment.
evening. I appreciate being able to go through all that material with everyone.
So leave that up for a moment. If your question was not answered and a lot we couldn't get to, go to this website. You can set up a consultation with Paul and Pierre, and they, I know they will make every effort that they can to answer your question. Stacy, I let you off the hook early, but it took some of our participants a moment to process some of the things you said. I have to circle back just so they don't leave these out around documentation.
Okay.
You mentioned canceled paychecks. You mentioned payroll. What if a church doesn't have the checks just because they go to the bank, they don't get their checks returned, or they're using a payroll, a payroll company, and they don't have that kind of information? Where could they get the documentation that they need?
If they're using a third-party payroll service, they have payroll registers that can be used. They also can provide you, I don't know if there's canceled checks, but they can, if they don't issue checks to my knowledge, except for very few, but if we needed a canceled check, like an ADP, I don't know, I mean, ask Pierre to undo, I don't know if we could actually get a copy of that canceled check, but I believe payroll registers, and if you're paying direct deposit, bank statements showing the money going out of your bank, canceled checks, even if you don't use direct deposit and you actually write a check, there's a way to contact your financial institution to get or go online to your online banking, and you can print off a copy of a canceled check. I can do that on my personal account. So I think there's an online banking mechanism to be able to do that along with your payroll registers from your third-party provider.
Thank you so much, Stacy. Those are all the questions that we could answer. I know others will reach out to you, Paul and Pierre, with some more. I want to just close by saying thank you. We are blessed as an annual conference, Paul, to have you and your team guiding us in these financial matters. So thank you very much, everyone on your team, for taking the time tonight to walk us through some very complicated information. I can guarantee you there was no class in seminary that prepared me deal with some of these economic issues. So thank you so much for guiding us through this tonight. We do really appreciate it, and we are truly blessed as an annual conference to have you.
Thank you, Bill.
Couple of things coming up, and people are echoing their thank yous as well in our Q&A box. A couple of things to wrap up this evening. Once again, this material is being recorded, and the PowerPoint slides and other documentation that we're able to provide will be posted to the conference website by the end of this week. Just so you can keep on your calendars, our next Training Tuesday is next Tuesday, June 2nd. And we are going to be joined by former District Superintendent and now Executive Director of Stakeholder Relations for Discipleship Ministries, Reverend Evan Young is coming home virtually to lead us through a presentation on building healthy, intentional discipleship pathways. And you can find more information about that and upcoming Training Tuesdays on the conference website, bwcumc.org, and just look under events for Training Tuesday. That is all we have this evening. Thank you, everybody, for sticking with us tonight. And if we could just close, I'm going to ask Paul. You asked me to open prayer with prayer, Paul, but I've heard you pray. Could you close us in prayer tonight? You're more than just numbers. You are a very spiritual person. Could you close us in prayer tonight?
Thank you, Bill. Certainly. Let us pray. Lord, we give you a simple prayer in the midst of complexity, in the midst of emotions that stir us up, Lord, and confuse us and make us anxious. We come back to you to know that you are our rock. You're here for troubled times. These are the times in which we can best get to know you as we're challenged the most. So, Lord, we look for these opportunities to further our faith and our relationship with you. And we thank you in Jesus Christ's name. Amen.
Amen. Thank you, everyone. Have a blessed evening, and we'll hope to see you next week.